Hey, welcome back. It's JWalter here. In today's video, I'm going to be sharing the latest update from Redfin. They just revised their housing market forecast for 2022. I'm guessing this is because mortgage interest rates have been skyrocketing, and more on that later. So let me first share their original housing market predictions for 2022, and that was just released about 4 months ago. So let me briefly share what that prediction was, and then I'll discuss their latest housing market forecast. So Redfin predicts a more balanced housing market in 2022, and that was released in November 18th of 2021. I made a separate video about that about 4 months ago. In any case, they said that 2022 will bring more balance to this housing market, but don't expect a buyer's market. I definitely agree with this. Do not expect a home buyer's market because we have a long ways to go as far as housing inventory. They say that just more selection, less frenzy, and slower price growth is going to be happening in 2022. We will see a rush to buy homes at the start of the year before mortgage rates rise. Mortgage rates have skyrocketed this year, so their forecast has changed. That early onslaught of demand will deplete the supply of houses for sale. And here's the key point here. In 2022, there will be 1% more sales in 2021, and by the end of the year, home price growth will slow to 3%. We saw growth about 15% in 2021, so that's a big decrease of only a 3% gain. However, the current forecast calls for more than double this rate. I'll share that with you in just a little bit. They also said that mortgage rates will rise to 3.6%, bringing price growth down to earth. And this is kind of laughable because the average 30-year fixed rate mortgage is around 3.85% already at the time of this video, which is February 8th. So their forecast for mortgage rates rising, I think, was a little bit off. They expect the 30-year fixed rate mortgage rates to rise slowly from around 3% to around 3.6% by the end of 2022. Obviously, we're at levels far higher than that. So let me go over their revised forecast. This was just released 5 days ago at the time of this video. They expect price growth to slow, sales to stay flat as mortgage rates approach 4% this year. So regards to home price growth, remember it was 3% that they were forecasting. Now they're expecting a 7% gain by the end of 2022. So more than double their previous housing market forecast. In addition, home sales are expected to remain relatively flat throughout the year rather than a 1% gain. And they're saying that this is going to be due to the ongoing shortage of houses available for sale. They also expect the 30-year fixed rate mortgage rate to rise steadily to 3.9% over the course of the year. I'm kind of scratching my head regarding this because the average 30-year fixed rate mortgage rate now is 3.89%, according to the Mortgage News Daily. This is a very, very high amount compared to the last couple of years. So we haven't seen rates this high since April of 2020. Take a look at this. April 2020, we reached 3.88%. So we're at levels right now, almost a 2-year high for mortgage interest rates for the average 30-year fixed rate mortgage. So Redfin, a chief economist, said demand is only getting stronger, and some of that demand may be a reflection of buyers' urgency to get ahead of rising rates. In other words, FOMO. They want to buy a house before rates increase further, right? The ongoing supply and demand imbalance is pushing home prices up and up. And I'll give you some stats here in just a little bit regarding that. By this summer, home prices and rates may cause buyers to pull back from the market. I talked about this a lot on the channel with a lack of affordability, a lack of affordable houses, but as interest rates increase and also home prices increase as well, that's going to cause a big home affordability issue in America, and that could slow down home buyer demand potentially, right? So let's talk a little about what we're seeing right now so we can kind of look ahead into the future. So for the 4 weeks ending January 30th, pending home sales fell 2%. That was the largest annual decline since June of 2020. However, compared to 1 year ago, this is quite a bit higher though. I'll discuss that here in just a little bit. Sales activity continues to be stalled by a lack of housing supply. So basically we're not having enough home sales because we don't have enough homes available for sale. You can't sell houses in great numbers if you don't have a large inventory. Instead, they said that 11% fewer houses were listed for sale than during the same period last year. This is for the 4 weeks ending January 30th. And total active listings, or another word for that is housing inventory, fell 29% to a new all-time low. This is the big issue we have right now. A lot of demand, but a very low amount of supply, and that's causing home prices to go up. Pending sales were 38% higher than they were 2 years ago. So even though pending home sales fell 2%, they're still at 38% higher than 2 years earlier before this pandemic started. And also just over half, or 51% of the houses that hit the market accepted an offer within 2 weeks, and that's the highest rate on record for any January. And here's the big issue here. The estimated monthly mortgage payment for a typical house in the United States soared 23% year over year to an all-time high of $1,877 per month. So what we're seeing right now is that home prices are increasing at much higher rates than wage growth. And of course, that causes home affordability issues. So their forecast is calling for a 7% increase by December of this year, and that's going to cause the median home sold price to reach $383,000. And right in December 2021, it's $358,000. So they're saying that in a 1 year time span, the median sold price is going to increase at $383,000, or about a $30,000 difference here. All right, so for the 4 week period ending January 30th, the median home sale price went up 14% year over year. A more normal long-term historic trend is 3 to 5%, not 14%. The median asking price also reached an all-time high of just under $370,000. And these are, by the way, for the top 400 plus US metros in the US. New listings for houses for sale were down 11%, but compared to January 2020, or 2 years ago, down 13%. But here's the a big takeaway here. Active listings, which is another word for housing inventory, the total number of houses for sale in these 400 plus US metros, fell 29% year over year, dropping to a new all-time low of 438,000 houses for sale for that 4 week time period. Listings were also down 49% compared to 2 years ago. In addition, 51% accepted an offer within 2 weeks. You compare that to 2020, 38%. So we went from 38% to 51% in just 2 years. And this is the highest measure that has ever been in a January, and the highest level since June, that 51% mark. Homes that sold were on the market for a median of 29 days. This means that once a house gets listed for sale, the home seller accepts an offer on average in 29 days. But you compare that to 1 year ago, 37 days. Compare that to 2020, January 2020, 58 days. So we went from 58 days to 29 days. So houses are selling about twice as fast compared to before this pandemic started. 41% of homes sold above the list price, and that's up from 33% from 1 year ago. And look at that, and up from 19% in 2020. So in other words, twice the share of houses sold over their asking price compared to 2 years ago. In addition, only 2.9% reduced their asking price over this time frame in January this year. In addition, also the average sales price to list price ratio hit 100.2%. That means on average, home sellers are selling their houses for 0.2% above their asking price. So I have some graphics I want to share with you guys, but also want to share some leading indicators as well. So one of the first leading indicators I want to share with you guys is home purchase applications. So that increased 4% a week over week during the week ending January 28th. And this is thanks to the latest report we have from the Mortgage Bankers Association, or the MBA, from February 2nd of this month. So mortgage applications overall increased 12% from 1 week earlier, but this is largely due to a big increase of refis, as a lot of homeowners who have not taken advantage of refinancing their mortgages are doing that because they're seeing mortgage rates increase greatly. Again, 3.85%, the highest levels we've seen in a long, long time, and over 1% gain compared to August of last year. So August, we're at 2.78%. Now we're at 3.89%, just shy of 4%. And meanwhile, the average purchase loan size, and by the way, these are applications for home loans to buy a house, not refinance. The average purchase loan size hit a new survey high once again at $441,000. And this is due to, of course, low inventory levels and, of course, home prices continue to go up. And meanwhile, a new survey by Fannie Mae is reporting that a record low amount of people are saying now is a good time to buy a house. So according to the survey, which is just posted on February 7th, they said that the Fannie Mae Home Purchase Sentiment Index decreased 2.4 points to 71.8 in January, its lowest level since May of 2020, as affordability constraints continue to weigh on the housing market. So in January, a survey record low, 25% of the respondents of the survey reported that now is a good time to buy a house, compared to the 69% who said now is a good time to sell a house. And Fannie Mae's senior vice president and chief economist stated the following: younger consumers, more so than any other groups, expect home prices to rise even further. And they also reported a greater sense of macroeconomic pessimism. Additionally, while these younger respondents are typically the most optimistic about their future finances, this month their sense of optimism around the personal financial situation has declined. All these points back to the current lack of affordable housing stock, as younger generations appear to be feeling it particularly acutely, and absent an uptick in supply, may have their homeownership aspirations delayed. On the whole, the latest HPSI results are consistent with our forecast of slowing housing activity in the coming year. All right, so going back to this report from Redfin, I want to share some graphics with you and then we'll wrap this video up. So the median asking price rose 13.9% over the 4-week rolling average for the end of January. But take a look at this. 13.9% increase. Right now we're at about 355,000. 1 year ago, we were at about 315,000. And in 2020, we're just under 275,000. So in 2 years, we went from 275,000 for the median sold price in the US, at least for these 400 plus US metros, to 354,000. That's a big increase in just a short period of time. Meanwhile, the median asking price reached an all-time record high, and it's shooting up just like the last 2 years we've had in the US. Pending home sales are really in line with 2021, just a slight decrease compared to 1 year ago, but still elevated levels compared to 2020. New listings of houses. This is when a seller lists their house for sale. That's a new listing. That's down 11% year over year. The direction is still in line with the past 2 years, but we're still about 11% less now compared to 1 year ago. And here's the mind-blowing graphic here, in my opinion. So this is active listings of houses for sale, or another word for housing inventory, down 28.7% compared to 1 year ago. But right now, 439,000, just under 440,000 houses for sale in 2021. And by the way, I really wish that Redfin would give us the number for each of these years. That'd really help us out. But in any case, in 2021, we had just over 600,000. And before this pandemic really started, we had just under 900,000 houses for sale. And now we're at 439,000. And this is why, of course, home prices are increasing. We need much more houses to be hitting the market in order to have a chance at having a more balanced real estate market. In addition, 51% went under contract within the first 2 weeks. That's at elevated levels, especially compared to 2020, but it's been increasing greatly, and it's also in line with the last 2 years. So 40% accepted an offer within 1 week, and that's far higher than 2020 as well. And houses sold in 29 days on average in the US. And take a look at this. It's increasing, but the last couple of years has been increasing as well. So 29 days now, but 2020, we had about 55 days it took to sell a house in the US. 41% of houses sold over their list price, still in line with the general trend over the past couple of years, but still far elevated levels compared to 2021 and 2020. So 41% now, and just under 20% in January of 2020. Less than 3% had price drops. This is also in line with the last couple of years as well. Higher so than 2021, but not by very much. In addition, houses are selling for over their asking price as well, so 0.2% on average. Over the last couple of years, it's been fairly flat until you hit about February, and then we should expect, if home buyer demand remains strong, that we should expect this line here to increase, which would be in line with the last couple of years as well. So that is today's housing market update. What are you seeing in your neck of the woods? I always say that every real estate market is different. So this is for the 400 plus US metros. So on average, this is what we're seeing in the United States, but comment below what you're seeing in your neck of the woods. Also, if you got any value out of this video, then please hit the like button. I greatly appreciate that. And also consider subscribing if you haven't done so already. Hope you have an awesome day. Look forward to seeing you on the next video.